What's going on, you guys, and welcome back to the channel. Today we got another episode of our Q&A questions. This is the monthly series that we do. We had questions come in from the community tab, and today we are going to be answering a few from Instagram. If you're not already following me there, that's a great place to ask DMs. That's a great place to ask questions and just kind of get a behind the scenes look into more of the behind the scenes stuff. Kind of a little bit more into my life if that's something you're interested in, but there will be a handle up on the screen. What's your bench and how much do you weigh? We actually got a live in the gym clip as proof. Gonna leave that one to the end of the video. But hey, let's dive on into things. Thumbs up if you enjoy. Question number 1 comes in from Christian Robert Investing. How much do Canadian investors pay attention to American politics? And I think the answer is that they should. A big factor in this, if we're talking from an investment standpoint, would be when you look at your portfolio, how much of that derives in the US. I know for myself, I own a very solid weighting in US stocks. There's a very healthy dosage over there. So this is definitely something that impacts me. It's definitely something that I want to stay on top of. If you are strictly a Canadian investor, which is, hey, to each their own, it's probably not what I would recommend. It's not what I would do to just stay within the Canadian market. If you didn't have any investments in the US, it would have less of an impact. But of course, I think the American politics market, the US in general is just, they're the hub in the world. Not only finance related, but politics related, business, you name it. It's the United States. So I think it is important that as a Canadian, we are at least up to date. Maybe we don't have to follow it as closely as we want to, but even just for interest's sake, it's something that's very important to pay attention to. We have another question about the elections. I'll just knock this one out of the way. I'll essentially give my overall thoughts on the elections because we did have a variety of them. Question from Hala: will the US election have a big impact on the financial market, and how? And the answer is that I think over the short term, yes. In the sense that, we're already seeing actually over the past week or two, the markets have pulled back. And I wouldn't be surprised that as we find out more and more, I don't know when you guys are going to be watching this video, but I'm sure we won't have, I hope that we haven't heard a decision yet before this is out. But leading up to that, whenever there's uncertainty in the market or whenever there's uncertainty in our world, the market tends to get a little bit shaky. So that's one thing. I know it's a cop-out answer, but that's one thing that I would say is a given, is that the more we don't know, the more that's up in the air, which at this point it really is. It's still a toss-up as to what's going to happen. Markets tend to people tend to pull their money out of the markets. There tends to be a bit of red. And that's not a bad thing. I think that actually over the long term, if you look at any meaningful set of data, there's a lot of data. You could look it up on Google and there will be a lot of data points talking about the stock market return under a Democratic leadership, under Republican leadership. You could look at all the numbers you want. There's nothing really meaningful that you can find out of there. That's the simple answer of it. There's no trends. People will say that they'll find trends and whatnot, but that's just cherry picking. At the end of the day, short-term volatility, I think, is expected, but over the long term, I think nothing really is going to happen. Actually, what I think we can do as investors to play this well is to just keep some cash aside. And rather than speculate on who's going to win, I say this every time, but rather than essentially guessing or betting on who's going to win and how this is going to impact certain sectors or certain areas, just keep some cash aside and expect that, hey, if the markets sell off, if people start to panic and there's an opportunity that arises, you're ready to go in and pick up some good quality companies. Because yeah, you definitely could. I'm getting a little bit out of more than I want to say here, but if I did have to, speculate on what would happen, you could argue that, if Biden wins, the talk is that that's not as good for the stock market. That's not as good for the economy because, Trump has really been running on a strong stock market. That's his whole backing. That seems to be what he really what he cares about is a strong market at all-time highs. And that's fine. If Biden wins, there's talk that certain areas like energy will get hit. He's mentioned a number of times things like fracking he's against. Defense, I follow a company called Raytheon, so I'm kind of keeping up on top of this. There are certain areas that would either perform well or not well if a certain president wins. But again, you're just gambling. You're just betting on what's going to happen, because it is still a toss-up. It's still just a coin flip at this point. So I would say the best way to approach the election is keep some cash aside. If there is a sell-off, which hopefully there is, I'd love that, go in and scoop up some good shares. But that's really the simplest way that I would answer that question. We'll answer a question that I just saw here on Instagram, which I think builds well off of that previous one. Question from Terrace Blaze: how much percentage of my portfolio should I dedicate to cash? I think the answer to that one is that, of course, it totally varies and it totally depends on you, but that will fluctuate depending on how you see the current state of the world, the current state of the market. Take a time like now with, again, all the uncertainty, all the volatility, elections, coronavirus, earnings season. There's just a lot going on at the moment. I'd say now is one of those times where you can actually bump up your cash weighting. So whether that means, adding more money to your portfolio, that's always the ideal thing. If you can add outside money in, or even maybe trimming from your good positions, some of your winners, if you have stocks that are now overvalued, they've done super well, trim there and actually keep that cash ready to redeploy. I'd say, and this is tricky because it really depends on who you're talking to, but a nice cash balance in general, like a range, could be anywhere from 5% cash to as high as maybe even areas like 15. 20% is pushing it. I'm an advocate for the most part of having your money invested in the market. Time in the market beats timing the market, but it is definitely a strategic move that you can play to bump up that cash weighting. I'd say sometimes as high as 20%. I'd be happy to do that. Again, just so that you can take advantage of certain opportunities as they come up. But the answer is that it will totally vary depending on the current state of the market. Question from Fernando Orozco: do you find it hard to keep buying a stock when you started a position hoping to average down and then that stock went up 20% or more? I know that if it's a great company, it doesn't matter, but it's just a bit too hard. Do I find it hard to do that? I totally do. I totally see where this question's coming from. And I think it's actually a really good question, because it's a situation that a lot of people find themselves in. And a lot of people have kind of this unwritten rule. They kind of have one of their laws is I'm not going to buy a stock if it's gone up from where it was. And that's a great mindset, right? I love the mindset that you want to buy low. That to me shows you that you've got a good grasp on essentially looking for deals out there rather than just chasing previous gains. That said, I think it's a mistake to say I will never average up on a position. Like you said, if it's a great company, you need to look at it in the sense that at today's price, even if it's more than I originally paid, is this a great entry point for the long term? And if it means paying a higher price than you originally paid, that's something that I think you should absolutely do. I do it from time to time. I can think of a couple companies that I've done that on. Anta Sports, I've done it on. Amazon, I did it on a while back. And yeah, it sucks to do. You never want to do it. But again, you need to look at it, forget the past, look at it from today. What's the share price trading at? Is this a good time to buy going forward? That's the best way to answer that question. Gerald Draymond asks, is there a Canadian equivalent to the S&P 500? Also, do you recommend that Canadians go out of their way to invest in US index funds and ETFs, regardless of the extraneous commissions, fees, and charges? Really good question. Is there a Canadian equivalent to the S&P? I don't know if you're talking about the TSX in the sense that the S&P 500 is the broader US market. The TSX index is what we have here in Canada, which stands for the Toronto Stock Exchange Index, the TSX index. So that would be your comparable Canadian versus US, or maybe you're referring to an ETF that invests in the S&P but is traded here in Canada. And in that case, there absolutely is that option. A very popular one to look at is VFV, right? That's the Vanguard. It invests in the S&P 500, but it's traded here in Canada. And really any major provider that you look at will have their offerings of the S&P 500. Would I go out of my way, or should Canadians go out of their way to invest in US index funds? I think that is totally acceptable. What I believe the question is asking here is if there's a US traded ETF, which would require us to go out and buy, make a currency conversion, go out and buy that in US dollars. Like you said, there's fees, commissions, and charges that come with it. I think that's okay if you really want to get your hands on that specific fund. You'll come across many cases where, let's say it's I've come across some video game esports funds where it's I really want to invest in that fund, but maybe there's only a US option for that. Maybe there's no Canadian alternative. Absolutely, there's nothing wrong with going out and buying that. Like you said, just be aware, just be cognizant that you are going to be paying some extra fees, but absolutely nothing wrong with that. Really good question. S. Ludu asks, why doesn't the education system teach us anything about investing in taxes? I have no idea why that's the case. It's a shame. You'd think nowadays, you'd think by now that they'd incorporate some form of lessons, some form of, I think at least in high school, you should have the option to take these type. I mean, you do have the option to take certain classes. If I can recall back, you have like, business electives, I guess you could say, but I think it should absolutely be mandatory. Like there's no question about it. You could kick out a lot of other crappy subjects, no disrespect to any teachers out there or whatnot, but yeah, I think it should be. Maybe the system's just trying to raise us into a bunch of drones, a bunch of sheep. I don't know, but really good question. I'd love to hear from you guys on that. If you guys have any opinions on that, leave it down below, because I'd love to hear it. Is it really that important to diversify or simply just invest in good companies? I think it's a combination of both there. Question from Damien. You'll hear people like, if you actually look into it, there's a lot of high profile investors that say diversification is for idiots. Diversification is just for people that don't know what they're doing. And that very well may be true. For most investors, diversification helps us spread those risks. It helps us cover our butts in the case that we do mess up with the selection. I think the answer is both. You have to pick good companies and you have to diversify, because even the best of companies, stuff does happen to them. You may not think that. You may think, oh, this company's so safe, this company is perfect, and you put your nest egg into that company, one or two companies. It's just not a safe thing to do, because you never know what happens with the CEOs. You never know if they're being doing like under the table fraudulent stuff. Big companies, like take a big thing like Volkswagen, stuff like that goes under the table for years, and then all of a sudden it pops out. You got to be careful. So you should diversify. I think so, for I'd say most people out there. Seth and Camille ask, are you invested in Bitcoin or other cryptocurrencies? Why or why not? I've actually been getting a lot of questions on Bitcoin. I know there was a couple Instagram ones as well. Currently, I own about $1,000, or I shouldn't say that. I had $1,000 in Bitcoin, so it's actually probably worth a little bit more than that. I have not checked in a long time, because I kind of, I don't look at it like a real investment. I mean, I shouldn't say that. That sounds really bad. Blockchain, there we go. It's more or less just a fun one for me. I'll take a look here. It's just actually loading up my account. Failed to verify. Ooh, I got $2,000 in there. 2,000. So it seems as though it's doubled. 2,000. The app's just bugging out right now. Not too shabby. So $2,134. Don't know if you can see that there. Let's see if you guys can see if you can get that. There we go. Hopefully that didn't have my wallet code or anything on there, but yeah, I guess $2,000. I wonder if it shows what I bought it at here. Transactions. It does not, because yeah, I bought some Bitcoin after the big sell-off, and it has slowly been gradually creeping up. If you actually look at the Bitcoin chart, I was looking at it earlier today, just out of personal fascination sake. It's slowly creeping back up there. So it looks like I've doubled my investment since that $1,000 that's gone in. I think it's an area that we should not be counting out. I think that if you actually look into it, and I mentioned this before, I've done videos on, like, it'd be fascinating if you're just curious, if you're just bored, go watch the video that I did on cryptocurrency back in the day. Again, one of the first videos I did on the channel. It was more or less telling people, I really do believe in the whole blockchain. I believe in the actual practices, the actual applications of it. There's no question about that. It's just that there was far too much hype. And I say this time and time again about all sorts of topics, but that's a great example how, I mean, we all know how the Bitcoin bubble turned out. So I said, don't buy it then, but now it's a completely different story. And I don't really follow any other cryptocurrencies, not even Ethereum. I just kind of look for Bitcoin again as a fun thing, but the cryptocurrency space, would I count it out? No, I would not. It's still such a weird area in terms of you can't really research it. You can't really quantify anything. So it's like, again, I just look at it for fun, but would I be surprised if we saw another Bitcoin run? No, I would not. So that's my take on Bitcoin and cryptocurrencies at the moment. Marcelo Nezka asks, what books do you recommend for investors, budget newbies? Really good question. I'd say some of my all-time favorites for just finance related, let's go with, for beginners, Rich Dad Poor Dad, The Wealthy Barber is obviously a good one. One Up on Wall Street by Peter Lynch is another good one. And I actually bought a book that I've heard a ton of positive feedback on. It is I Will Teach You How to Be Rich by Ramit something. And I have that book at home. And as soon as I finish my current one, that's what I'll dive into. So I've heard that's another good one. Oh yeah, Simple Wealth, Inevitable Wealth. That's for any of our students. You guys know that book quite well, but those would be a good selection of beginner books in my opinion. One more question here from Instagram. We will go with, and then we're going to get into the final question that we've been waiting for. I got a video, I've been waiting for, got a video to show you if you have been sticking around. But we'll go with the question here from Aaron, Departures Capital. Thoughts on gold and gold stocks. For those of you that know my opinion, I am not a huge fan of gold. I just never have been. And it does, currently actually, I have no gold exposure in my portfolio. It represents 0%. I did own Barrick Gold over the past year, and it did very, very well for me. This is one of the big mining companies. These are one of the major producers here in Canada. They're based out of Toronto. If I was going to invest in gold, I would look, for the most part, to the gold miners rather than going out and actually buying physical gold. That's just my opinion. I guess it kind of stems from like a Warren Buffett approach in the sense that, yeah, gold is gold. It's not really going to produce anything. It's not, it doesn't really have any output other than it storing its value. That's obviously just kind of a background on gold. But hey, it's a great example of how, in my opinion, looking at this chart, there's two things that we take from it. It's a good example of how when you buy into this weakness, and I mean, I got a very good price on Barrick Gold, you tend to be rewarded. Again, you can't do this with every company. You can't do this with crap companies, but companies are constantly flowing through their cycles. And when you buy low, you often get rewarded for it. It's another example of how during tough economic times, whether that be COVID related, whether this be the elections or whatever you want to pinpoint this on, when there is uncertainty and when there is volatility out there, gold is an asset that does really well. So if you're the type of person that loves to own gold, well, that is completely acceptable and that's completely fine with me. That could represent a nice portion of your portfolio. That's a good strategy for a lot of people. For me personally, it's just not my cup of tea. And that's why as of today, if you look at my portfolio, I own 0 gold, but I did own it and I got a nice little bit of this run up. But that's really my 2 cents on gold. Not much of an opinion on it. Finishing off today's video, we have the question from Channel Break. What's your bench and how much do you weigh? If you are sticking around for this question, I'm very curious what some of you think. First of all, if you made it this far in the video, I do appreciate you guys watching all the way through. I hope you guys enjoyed the answers, and I hope I was able to answer some of your other real questions there. I mean, this is a real question. It's just not a real money question. Alex Marshall commented, or he replied to the comment, I'm going to guess Brendan weighs 180 pounds and has a 1 rep max of 215 on the bench. To be completely honest with you, I didn't know my 1 rep max, so I just thought I'd put it to the test and take a look. I'll put up on the screen here. I did not do 215 because I never really go for like my true 1 rep max. I mean, I work out alone, so I just never push that hard anyways. But today I repped out, I believe 7 or 8 reps of a plate 35. So you can do the math on that. Not quite 2 plates, but I mean, hey, that was for reps there. So I'm really not the type to push that heavy, like maximum weight. I just kind of go for what's comfortable. But yeah, that was a plate 35 for reps. Good guess on the 180 pounds, but I wish I was 180 pounds. I weighed in, like the last time I weighed myself, I was 215 pounds. So 215. But you do have to keep in mind, I am height-wise, like I'm about 6'1". I'm about 6 feet, 6'1". The 2 YouTubers that I met this year, which were Jeremy from Financial Education, and I just met the Humble Trader, they both said like, holy, you look taller than your videos. I didn't expect you to be this tall. Not that I'm super tall, but I guess you don't really get the perspective here on the camera. But yeah, that's the answer to that. That's a fun question. I really like it. But hey, thank you guys for watching today's video on the Q&A segment. If you ever have any questions that you'd like to have answered, again, I'd suggest actually following me on Instagram, because that's such an easy place to just pop the question in. They're always stored there. Or coming up to next month, I always make a post on the community tab where you can ask really anything you want. If for some reason this is your first time watching this, I don't know why YouTube would recommend this to, it probably wouldn't, to a first time viewer, but if you are new for whatever reason, hit that subscribe button, because we post this video every month, we post videos every week, and we do have our investing academy. So if you are a beginner to the stock market and you just want to learn more about these questions, maybe you have a bunch of these questions, click the first link down below to learn more about our academy. We offer courses, training, a community where you can just ask questions. You can meet the others. It's really a very, very cool community. That's that first link down below. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.